on the show. Connect with you later in the week. Well, let's carry the conversation forward. Shiv Sehgal, President and Head at Nuvama Capital Markets, is with us on the show this afternoon. Shiv, pleasure to have you on, and glad you could finally make it to join us on the show. We've been looking at some of the notes that your team shared with us. I mean, some of the data points which seem to suggest that you guys at Nuvama feel that we are in for a long ride. And probably more flows when it comes to India vis-a-vis other emerging markets. So lay out your theses and tell us that at 19,500 plus, can you stick your neck out and say that we will still be substantially higher, say, in the next 12 months?
So, Surabhi, firstly, thanks for having me on the show. As you rightly said, I think, before we get to where we are today and what the journey is going to be over the next 6-9 months or 12 months, per se, I think it's very important to realize what transpired in the last 2 years, right? I remember, we've been talking about the significant FII sell-off that transpired in FY 22 and 23, right? And if you combine the cumulative net sell, it was almost $60 billion that foreigners took out of India, right? The flip side of that was we had an amazing domestic equity culture forming. And, that has been happening since 2016. And I think that, to me, was an inflection point in terms of your financial assets, which are in the form of cash and savings, moving into the equity asset class or the derivative equity asset classes. And that trend has been going, right? And that is the reason why domestic mutual funds have seen almost a 10x growth in the last 10 years. This is exactly very similar to the developed markets in the 1980s when US was transpiring and there was a combination of demography and deregulation, which spurred strong retail interest in the equity markets. I think we are, maybe 2 decades, 3 decades behind, but that kind of, it is the same setup that is extending over in India. And that overlays with the fact that if you look at the rest of the world is starved for growth. And to me, growth is GDP, which is nothing but a combination of 3 things, right? GDP today stands for population growth, productivity growth, and debt growth. Now, as we all know, that for the last, 2 decades or maybe a decade and a half, the population growth in the developed world has been on a negative decline. There has been an aging population problem. So the heavy lifting in growth perspective was done by the influence of debt and a lot of productivity, which is in the IT space that happened in terms of AI, what we're talking about today, and which led to this whole passive money and active money coming into the likes of NASDAQ, right? Now, coming into this year, right, March of this year, you were talking about, everything was quite negative. Foreigners had been again selling. That transpired into 2 things. One was sentiment was, I would, in my mind, extremely bearish from an overlay perspective in what had happened in terms of the US Fed rates increasing by 5 percentage points, which has never happened in the capital markets in a 12-month span of time. Plus, with the fact that if you look at the FI positioning in the NSE 500, we were at all-time lows of 17% ownership. That transpired. So sentiment and liquidity, along with bearish positioning, is a very, very powerful incentive for the narrative to change, which is what has exactly happened in March. So Nifty has gone from 16,900 to almost 19,400 as we speak. The mid caps have been having a very significant rally. Nifty is up 15%, mid caps are up 24%. To overlay that, your question, why suddenly India is the darling? There is also a lot to do with the fact that the rest of the EMs are having their own inherent problems. So India stands out as a darling. A lot of structural reforms and a lot of what we have debated on your shows, right, as to the groundwork that has been overlaid in terms of the digital transformation that India is going through, the regulation, the GST, the DMON, that all that transpired. We have laid the foundation for the next leg of growth, which first transpired into FIs and domestics always putting money into India. And now we are going to see the multiple re-rating first happen, then the earnings catch up, which we continue to see. So last quarter, people were expecting to be a muted growth. But, if you look at what transpired, the banks came out flying, credit capex was happening, the NPAs were very low, balance sheets are very strong. Yeah.
Shiv, allow me to come in over there because we're a little short on time. That's yep. You've explained the setup quite well to us. But very quickly, what next? It's all about the future. The question is now at, I think, a little over 19 times earnings. Are you still expecting more multiple expansion? What are you expecting now? I mean, can earnings keep pace? Let's say, over the next 6 months?
I get your, I'm preempting your question, Surbi. Valuations and momentum are two different things. Japan traded as a cheap market for a very, very long time, right? Nasdaq has been relatively expensive for a very long time. As we speak, I'm not sure if the audience has been following, the top 7 stocks in the Nasdaq are now making up, Nasdaq is about 100 stocks index. The top 7 stocks make up more than 50%. And the providers have now decided to rebal and cap because the index is supposed to provide diversification. So on 24th of July, there is going to be a diversification cap, which is going to reset. My point being that, India is just on the cusp of the inflow of money coming in, which will continue because we are a shining beacon in the rest of the world where growth is not happening. I think earnings will have to continue to match up. But at the moment, given what has transpired in the last 2-3 quarters, I think there will of course be pockets where we see, things run up, consolidation happen. But over time, the trend remains very, very positive. I think India will remain a shining beacon over the next couple of months and quarters. I have always been saying that India is a long only market where any consolidation or dip that happens, you continue buying. As some of the smart investors have coming on your show, I've been kind of rehashing the same statement. I am of the view that we'll be seeing new highs on a constant basis. Of course, there'll be pockets where euphoria happens and there'll be some consolidation. But overall, by and large, given the fact that we are short on time, I can say that structurally, there are 5 themes that have been developing in India, which are not prevalent in the rest of the world. And at Nuvama, right, as you rightly saw, and in every note, we keep talking about the India's 5D advantage, which to us is been rehashed quite popularly in the media as well, which is debt, deglobalization, deregulation, demography, and democracy, right? I think the confluence of these 5 factors structurally are forming a very, very strong base for India. And I think India is on the cusp of being the shining beacon for this decade. I'm not talking about 1 quarter, 2 quarters. You're asking me to give you a prediction for the next 12 months. I'm saying for the next 2, 3, 4, 5 years, I think India will continue to see a lot of influx of foreign flow coming in.
Shiv, good afternoon. This is Nigel on this side. You're clearly very, very positive on India for the next 10 years or so at least. And our time has come. So that's great news. I had dinner with Doctor the other day at NSCI. And he was telling me, Nigel, I invested in the markets in 2019, 2020, and my portfolio is up more than 2.5 times. Can I expect that sort of a run rate? I was like, no, hold on a minute. I don't think that's really possible. He said, because I went to a couple of advisors and they are talking about 10, 12%. I said, over a longer duration, if you get that 10, 12% per year, that compounding is going to result into a lot. So a lot of viewers out there will be wondering if India is going to do well. And if you're investing funds into the market indirectly, that's via all the instruments that we have, what kind of a steady state return should you be looking at?
So see, normally GDP is growing at around 10, 12%, right? I would assume that barring the volatility, which is always going to happen in markets and the euphoria and the ebbs and flows, we also have a geopolitical event coming in terms of elections. The rest of the world actually is not growing that well, Nigel. That is extremely critical to understand here. India still remains a capital-starved nation. There's a reason why we are still an emerging market. Now, I've done a lot of study as and when poor nations become rich nations, emerging markets become developed. The one underlying factor that remains is that for any country to become rich, the common theme that has happened and which the US and the developed markets have done well over a period of time is they've built strong institutions that have outlasted bad governance or governments, right? That is very, very critical to understand. So as long as, the startup system and the risk appetite that has happened in India is going to generate a lot of these entrepreneurs. A lot of the large caps today were mid caps, 2 decades back. The point being, we will go from 3.6 trillion to 6 trillion. But I think if nominal GDP is going to grow at 10, 12%, a healthy state over a period of time, CAGR of 15%, 18% is brilliant, right? In a world where,
Shiv, I'm sorry to butt in again over here because, your bullishness is taken on record quite well. A very small question, and I think we only have 30 seconds for an answer right now. While we take all your points on board, I'm just curious, what have you made of all this insider selling? I mean, June till we got into the earnings season, sort of, the block where you can't sell. PE guys are selling, insiders are selling, promoters are selling. So how should we read that? Is there any reason to worry about the near-term market?
So private equities had a torrid last 18 months. As and when they have mark-to-markets which are in gains, they will come to sell. They also have other startup portfolio companies which were supposed to get listed have not happened. I think that the IPO market in India is also about to open in the second half of this year. But having said that, if you look at the mid cap index, we have come back to the highest, which was, almost at, January 2018. So we've come back to a level which was 5 years back. And as a result of that, you will see people come and take some profits off the table. As I said, India will go through a consolidation phase and then a euphoric phase. We went through a consolidation phase over the last 18 months. We are going, when I say euphoric, I think, a bullish theme. I think this bullish theme can last at least for a couple of months. The IPO markets have just opened up. The primary markets are just opening up. I think that will continue. And the fact that, not much is getting deployed in our, a very large neighbor, which is China, is helping India tremendously. As for me, the risk factor is what happens in Southeast Asia. We need to keep an eye on that. China is also, opening up the floodgates in terms of liquidity and easing. That can spur the markets there. Sure. And we'll see how India plays to that.
Okay, got that. Shiv, thank you very much for joining in today. That's a real bullish call on India coming through. Thanks for joining in. We'll take a quick break. On the other side, we get you a check on all the dealing room chatter today. Nimesh joins in, and then, of course, a couple of trading calls for the last half hour as well.